Hi, my name is Sunny Singh, and before you read this entire article that I wrote, this is Summary with Sunny. So check it out. If you're not like me, maybe you read every day, think about it. Look at how much we read. We read articles, we read Facebook posts, we read Instagram posts, we read LinkedIn articles, we read for work, guidelines, all that stuff. Sometimes it's nice to just watch a video that'll help condense and summarize what the article's about. And that's this.
Ever walked into a bank, handed over your financials, felt pretty confident, then walked out with a denial? Yeah, you're not alone. Here's the shocking truth most people don't realize. When traditional lenders reject your mortgage application, it's often not because you can't afford the loan. It's because their systems are outdated, rigid, and built for a world that doesn't exist anymore. And if you're self-employed, a freelancer, business owner, or gig worker, the odds are stacked even higher against you. Let's talk about why this happens. Banks love what they call the perfect borrower. Someone with a steady W-2 job, 2 years at the same company, high credit, low debt, and predictable paychecks. If that's not you, their algorithm flags your file as high risk. But think about that for a second. Just because your income doesn't fit into a little digital box doesn't mean you can't afford a home. In fact, most self-employed folks I work with have plenty of income. They just don't show it the way banks expect. So what's really causing all these rejections? A few big ones. Too many tax deductions. You write things off, because you should. But on paper, your income looks smaller. Irregular income. Banks hate fluctuations, even when your total earnings are strong. High debt-to-income ratio. That business credit card or equipment loan, it throws off their numbers. Short work history. Under 2 years self-employed? Many lenders won't even look. Credit below 700. Some banks stop the conversation right there. See the pattern? These aren't real financial problems, they're system problems. Here's the good news. You don't have to play by those outdated rules anymore. That's where non-QM loans come in. These are non-qualified mortgages, designed for people who earn money in non-traditional ways. Instead of tax returns, you can use bank statements to prove income. Lenders average your deposits from the last 12 or 24 months to see your actual cash flow. Or maybe you qualify through a $1,999 loan or asset depletion loan, where savings and investments count as income. These programs were built specifically for freelancers, business owners, and independent professionals who've been overlooked by the traditional system. So if the bank told you no, don't take it personally, and definitely don't give up. You're not the problem. The system just wasn't built for modern earners. At Kees Lending, we help self-employed borrowers like you get approved using non-QM programs that actually reflect your financial reality, not punish you for being smart with your taxes. So if you're ready to stop letting outdated rules hold you back, reach out today. Let's turn that denied into a confident yes.